Hello, I am Jason Shapiro with crowdedmarketreport.com. I've gotten a lot of questions recently about how I handle stops and how that all works and position sizing and all that. So I thought I'd do a quick video just getting into that a little bit. And it starts with this. For me, and I think what should be for everyone, my stop is based on where my theory is wrong, okay? If my theory is wrong, I think the market's going up. Where is that proven wrong? And therefore, I should get out. It's not about trailing stops or any stuff that can be taken out randomly. It's a place that makes sense. I'm proven wrong, I'm out. Okay. So it's a little bit easy for me to do that because I'm a turn picker. I'm picking a turn in the market. I'm picking the ultimate low or the ultimate high. So clearly, if I buy a market and it goes to a new low, well, then my theory is wrong. It hasn't hit the low, so I get out and I'm stopped. And the way it works is I get one of these days where there's a news failure and I buy the close and my stop ends up being the low of that day. And then I back into my sizing based on that. So I know my entry, I know my stop, I know how much I want to risk per trade, and therefore my sizing gets adjusted to reflect that. All right, so that's kind of how the sizing things works. Now, the good question that comes up is, okay, so my stop is the low of that day on a closing basis. All right, so that's the close at a new low. So what happens if it gaps through that new low, right? And so my risk was a lot more than I thought. And by definition, there's going to be slippage on every single trade that I have on that because it's not going to just close, one tick below the low of that previous day, most likely. So there's a couple things I do about that. One is I adjust the size. So I'm risking 70 basis points per trade. So knowing that there's going to be slippage on that stop, I'll really size it to risk about 65 basis points a trade. All right, to adjust for the potential slippage. Then the next thing that happens sometimes is it'll go through the low on an intraday basis. And what do I do? Do I actually wait all the way till the close? Because if I do, there's a chance that the market could keep gapping away from me and my loss becomes a lot bigger than I was expecting it to be. And that's true. So what I typically do, if it goes through the low to that new low on an intraday basis, is I will start selling during the course of the day. I'll start getting out of that trade during the course of the day. And certainly if it closes through that low, I'm out by the end of the day, no questions asked. But I will start sort of getting out of it over the course of the day. And then, of course, what can happen is it'll make a new low during the day, and then it'll close up on the day and close above that low, which means I'm still supposed to be in the trade. And meanwhile, I've been selling it during the day. So all I do is at the close, if it does that, I put it back on. And this is an example right here of that. This is a bean oil chart. This day right here, okay, which was May 18th, we got a buy signal in bean oil. All right, on the close, I bought that, which was 47.27, and the low was 46.91. So 47.27 to 46.91. That's how much I'm risking on the trade. So I put on a position size so that if that happens, I lose 70 basis points or 65 basis points. So the trade went on, and on this day right here, which was May 31st, it went through that low on an intraday basis, and then it came back and closed above it, right? Because the low for that day was 46.16, and we were talking about a stop of 46.91. So it had gone through that low. So in fact, I started to sell it a little bit, but very quickly, actually, on that particular day, it bounced back and was above that stop. So I stopped selling it. And by the close, it actually closed above it. Okay, the close that day was 46.20, and the stop that we were talking about again was 45.75. So whatever I had sold over the course of that day, I just booked back on. And I'm back long. And did I get some slippage in my P&L there? Yes, I did. But that's sort of the price you pay to make sure that the thing doesn't, gap below and just start going and go limit down and have all kinds of nightmares involved here. So I'm willing to lose a little bit on that as I go to make sure that that horrible occurrence doesn't happen. Last thing you need is the thing, you're talking about a market that's hitting a new low. So that's not something you want to really fool around with. It could go limit down. The next day could be limit down again. The next day could limit down again. And all of a sudden you're screwed. So I would rather err to the conservative side and have to buy it back if I'm wrong about that intraday than have to deal with that. So I hope that helps to understand how I deal with this. Always happy to hear questions and comments, and looking forward to seeing everybody on crowdedmarketreport.com. All right. Thank you very much.